Hi friends, in this video I am going to cover 5 stocks from 5 different sectors. But more importantly, these 5 stocks have massive tailwinds as the Indian government is putting a lot of investment into these 5 sectors. Whatever I'll speak will be all data backed. So in the interim budget, 6 sectors were identified by Indian government and lot of investment was talked about in the interim budget. And in my view, these 6 sectors are likely to continue to be in focus until NDA government is in power, at least for the next few years. Therefore, it is extremely important for us to understand 5 to 6 hypercritical points about these stocks. So these 6 sectors are railways, housing, health, energy, environment and agriculture. Let me start with railways as a sector. Very recently I covered 2 stocks from railway sector. Please go ahead and watch that video. You are going to learn a lot. But in this video I want to speak about a stock called RVNL, Rail Vikas Nigam Limited. I had covered this stock in a great detail just few days back on my YouTube member community, and that was a timely update. So if you're looking for timely updates on stocks, mutual funds, consider subscribing to my YouTube member community. Go to my channel and just press the join button. Try it for 1 month and see if this helps you in your investment journey. With that, let me now give you 6 to 7 hypercritical points about RVNL. In the last 1 month, stock has given close to 60% returns. A massive rally is what we have seen. If I look at the last 1 year, stock has given close to 404% returns. So the natural question is that, Rahul, why the stock has given such a massive rally in the last 1 year, and is this rally likely to continue or not? So there are 6 to 7 points here that I will give you. Number 1 is the order inflow. So have a look at my screen and you will see July 13th, the Central Railway placed an order of 138 crores rupees to RVNL. Also have a look at another order, 13th of July, Maharashtra Metro Rail Corporation placed an order of 187 crores. Have a look at my screen again and you will see again 13th of July, Southeastern Railway placed an order of 202 crore rupees. Also, if you see 9th of July, the company signed a MOU with a company in the Middle Eastern Africa. So people who think that RVNL is just a company that is singing and dancing on the tunes of Indian Railways, you need to really correct your conception. I will actually speak about the diversification of RVNL that it is doing right now. Now, when these orders are pouring in, what happens is that investors get very confident about the revenue and profitability, visibility of the company for the next few years, and therefore they start to invest in the company. Now, if I talk about the order book of this company, what the company claims is that as of May 2024, company is sitting on 85,000 crore rupees of order book. And just to put this in context, that is almost 4 times their top line that they did in FY24, which was around 21,000 crores. So there is a massive revenue visibility that the investors can see. Now, please don't think that from here on the revenues of this company is going to double every year. That is not the reality. Let me bring you to the ground reality now. See my screen, and what the management is saying is that they want to increase their top line by 5% every year and roughly 15% in the bottom line in terms of the next 5 years. Now, this is not a massive growth that the company is likely to see in the top line or in the bottom line. But the point I wanted to drive here is that as the quarters go by, and if the company perform better than 5% of the top line and better than 15% of the bottom line, then what is likely to happen is that the market's expectations will be beaten and the stock is likely to do well. Are there chances that the company might do less than 5% top line and less than 15% bottom line? It is entirely possible, but the likelihood of that happening is very little because of the order inflows I am seeing in FY25 already. So hope this hypercritical point number 1 is very, very clear to you. Let's move to the second point, which is the diversification. People who think that RVNL has got a big dependency on Indian Railways, you are partly correct. But what company has been doing in the last 2 to 3 years is that they have been diversifying. For example, they have been picking up projects from countries such as Bangladesh, Maldives, Sri Lanka, UAE, Oman, and many other countries. Now, some of you may think that with Maldives, we have had a recent controversy around they making some remarks on our Prime Minister. But the point here is that they backed a project from Maldives back in 2020-22, which was worth 1,545 crores. Also, very recently, the company signed an MOU with a country called Kyrgyzstan worth 18,000 crores. So this is a mega deal that they're going to operate. This is happening because RVNL has developed expertise in laying out the railway infrastructure. So more and more countries where there is no expertise out there. So for example, countries like Bangladesh, Sri Lanka, and many other countries in Middle East as well are trying to reach out to RVNL and trying to take the bids from RVNL. And that brings me to the third hypercritical point about the business model of RVNL. Give me one to 2 minutes, you need to really understand it. So there are two business models that the company operates. Number one is the nomination basis, meaning when Indian Railways will say to RVNL that Mr. RVNL, you are going to execute this order for Indian Railways. This is called that Indian Railways has nominated RVNL to do a project, right? The second type of the business model is where the RVNL proactively go and bid for the railway infrastructure projects. That is called bidding. Now, interestingly, when the company goes and do bidding for projects, their margins are much better than when they are nominated. So for example, Maldives project that they did, the margin was 11%. Also, Indore metro project that the company did recently margin was 10.66%. While when the Indian Railways nominate RVNL, the margin profile is slightly lower side. For example, for metro projects, they are going to get 9.25%. For example, for national projects, they are getting 10%, 8.5% for many other projects. So point is that the company is now diversifying and trying to bid for more projects using their expertise, and which is where their margin is slightly higher than what the Indian government is paying. Now comes the next point. What does RVNL actually do as a company? So the company does a lot of work around the railway infrastructure. So for example, they will lay down the new lines, they will double the lines, gauge conversion, railway electrification, setting up the railway workshops, metropolitan projects. So there is a number of things that the company do, including building the bridges under which the rails can go, and many other things that you can see on my screen here. Now let me quickly spend few seconds speaking about the future potential of this particular company. We have seen a very healthy order book already, but the point is that the 3 railway corridors that were announced in the interim budget, high speed railway corridors, none of that has come to RVNL so far. I don't know when the tenders will be issued. I don't know what sort of business they are likely to get. But what you read here is that the company is quite keen to get some pie of that revenue whenever the tenders are likely to be issued. So that might be another tailwind for this company. Again, it is very hard to predict. Right now, this is merely a speculation, but the company is ready to pick up any orders coming from that side. Let me now quickly move to the valuation side of this stock. And if you see my screen, you will see that RVNL is trading at a PE of 90 if you compare this with construction companies. For example, IRB Infra, GR Infra, PNC Infratech and such companies. And if you see, that is almost 4 times the PE of the industry. While if you look at the PB as well, around 16.8 now, very high, around 7 to 8 times of industry PB. But if you compare this with other railway stocks, for example, Jupiter Wagons, Titagarh Rail, you will see that even Jupiter Wagons is trading at around 86 PE. Titagarh Rail is trading at around 80, and from that perspective, it is slightly on the higher side from a PE perspective, and therefore the biggest risk right now I see in RVNL is any time the stock may get corrected. Rahul, what are you talking about? In the last 1 month, every day I look at this stock, it keeps on going up. Yes, that is true. But see what happened to Titagarh Rail System in the last few days. The stock hit a high of 1858, but then stock started to correct because of the profit booking and it fell down to 1712. Meaning, if you ever want to invest in stocks which are rallying like crazy, you really need to be cautious and just think about what is the right timing. In my view, if I were to invest in RVNL, although I'm not saying I am and I'm not giving any stock recommendation here, let's say I want to invest 1 lakh rupee in XYZ project that is under massive rally, what I would like to do is every day I will possibly go and buy 1 stock of that company for the next 60 to 90 days and let my investment in that company happen at different price points so that I can average it out, and also I can see how the stock is going to trend in the next 3 months. Why to put all of that money in one go in such stocks which are going massive rally right now? So far, if you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, if you like this sort of analysis, you can consider subscribing to my YouTube member community where I share exclusive in-depth analysis of stocks and mutual funds. Before I move on, if you want to build your business, that too on internet, then you can build an absolutely stunning and aesthetic website, that too for free with Odoo. And for this website, you are going to get unlimited hosting and support, and as well as free custom domain for 1 year. Odoo is much more than building website because it's a business management software for small and medium businesses. And Odoo offers its users the choice of 1 app absolutely free for the lifetime. So if you already have a business or plan to launch your own startup, Odoo can run your entire business on one single platform with everything integrated and simplified. In fact, Odoo has more than 70 apps covering critical business areas such as sales, marketing, finance, manufacturing, and much more. Beauty is that these apps are integrated, reducing the manual work. You no longer need hundreds of Excel spreadsheets and no longer need 14 different subscriptions to run your business. Odoo platform comes with inbuilt localized capabilities such as Razorpay and UPI for payments, GST, TDS and TCS for accounting, WhatsApp integration for marketing and communications, integration with Flipkart for e-commerce, tie-up with Zomato and Swiggy for your restaurants and much more. If you want to use only one app, which is your website, then that's absolutely free for lifetime with unlimited hosting and support. If you want more, you can use all of their apps for a price of 580 rupees per month per user. So check out Odoo today. Link is in the description or in the pinned comment. Let's move to stock number 2, stock called HUDCO from the housing sector. Now in the interim budget, additional 2 crores of house will be built over the next 5 years was announced, but more importantly, what the government announced was that a new scheme will be launched to help sections of the middle class living in rented house slums, unauthorized colonies to buy or build their own houses. Now there may be more clarity that might come into the budget presentation in the month of July or in the subsequent months, which might act as a tailwind for this company called HUDCO. Therefore, I want to cover this stock. Now if you see my screen, what you will notice is that in the last 1 year, the stock has given massive rally of around 446%. What has caused this rally? I'll give you the view as well as I'll give you the future potential of this stock. All I need is 3 to 4 minutes of your attention onto this presentation now. So HUDCO is a PSU NBFC. Have a look at my screen and you will see that in FY24, the company has sanctioned more than 3.5 times of the loans that it did in FY 2023. So if a company is sanctioning loans more than 4 times or 3.5 times, then if the stock prices is soaring by 400%, then I'm not surprised at all, right? Because of the growth that we are already seeing in the company. If you look at the actual loans distributed, they have doubled almost in FY 2024. And if you look at the total loan book as of FY 2024, it is around 92,000 crores. Just to put this in context, REC, another PSU NBFC operating in the power sector, I've spoken about the company a lot on my channel, is at 5 lakh crores of loan book, and HUDCO is at 92,000 crores. So almost 20% of the size of REC, just to put this in context. Now comes the misconception that many people carry about HUDCO. People think that this company is only giving loans to the housing sector, but please understand this point. Have a look at my screen and you will see that the company reports their loan book into 2 segments. One is the urban infrastructure, second is the affordable housing. And affordable housing is right now in FY24 contributing around 49,000 crores, while the urban infrastructure is at around 43,000 crores. So it's not just about the affordable housing. Actually, it is more about the urban infrastructure. Point 2 that you will quickly note here is that 96% of their loan is given to government, like the state government, for example, and around 3% of their loan book is private sector. Now, the interesting third point you will note here is that their affordable housing loan book has not grown at all. From 46,000 crore back in FY21, it has gone to 49,000 crore in FY24, while their urban infrastructure has gone up from 29,000 crore to 43,000 crore. This is where the growth is coming from. Now, just to imagine the future, next 1 year, where is this loan book going to go from 92,000 crores? What the management is saying is that it is going to go to 1.5 lakh crores. So they are going to add almost 58,000 crores of loans sanctioned in the FY 2025, and in my view, that is a very, very good growth rate in a loan book. And as I said, where is the growth coming from? It is coming from the urban infrastructure. See this chart and you will see that the loan disbursements they did in FY 21 in urban infrastructure was only 4,600 crore. It has gone up to 15,000 crore in FY 24, almost 4 times. So what does this urban infrastructure actually mean? So for example, the company is giving loans to, for example, roads that the state governments are making, like ring roads, multimodal corridors, etc. They're also giving loans to industrial corridors, town planning, etc. They will also be focusing the metro projects as well as the Jal Jeevan mission projects. Lastly, they are also giving loans to projects where the government buildings like quarters or secretariats and these things are being built. So key takeaway here for you is that do not just think that HUDCO is a affordable housing NBFC. It is much more than that. It is actually the urban infrastructure that is driving the demand here. Now, when it comes to NBFC, after looking at the loan book and the growth, the next thing that I'm very keen about is the NPAs, because it's very easy to distribute the loans, but it is very hard to collect the loans back. And if you look at the gross NPA of this company, they have been coming down, which is a very, very good news, from 3.55% to almost 2.12%. The second important thing you need to know about HUDCO that differentiate with this company from many other NBFC is the cost of borrowing. Their cost of borrowing is coming down, which is a very, very good sign. So have a look at my screen and you will see they have been raising money from tax-free bonds, taxable bonds, and also from banks, and it ranges from anywhere between 5% to 8%. And one of the massive tailwind I feel that the company right now is going to enjoy very soon is that when RBI cuts the rates, then the interest rate the company is going to pay on the borrowings that they have done from banks is going to reduce, because they are based on the floating rate, as you can read here, and that is around 25,000 crore to 30,000 crore is actually based on the floating rate benchmark borrowing. So in my view, whenever RBI cuts the rate, then the company is going to see less cost of borrowing for already their portfolio, and that is going to help the profitability of this company. And just to conclude this, if you see in FY23, their incremental cost of borrowings were 7.46%. It has come down to 7.10%. And why they are able to do that? Because they are raising money, for example, external commercial borrowings here of 828 crores, which is for the tenor of 5 years only at 5.29%, which is a very, very cheap rate at which they are able to source the funds, and therefore their NIMs and the spread is likely to be much better than many other NBFCs. And talking about NIMs, if you see, their NIMs is very, very stable at around 3.18% here in FY 2024, and their interest spread is also looking very, very stable at 1.79%. Now from a valuation perspective, if you compare this with many other NBFCs, for example Aptus, Aavas, Aadhar, and many other financing companies, you will see that they're trading at a PE of 32 versus industry PE of 21. So this is trading at a higher PE, and from a PE perspective as well, it is trading almost twice the industry PB. But of course, there is a reason that the company is enjoying this premium, because of the points I've just explained to you in this video. Now, if you like this analysis, hit the like button before I move to stock number 3. Moving on to third stock, the name of the stock is Praj Industries, and the reason I'm going to speak about this stock is because this stock operates in two sectors that the government is bullish about. Number one is energy sector, and number two is environment. So from an energy perspective, read this line. This is $1 million line that the government is saying that to achieve net zero by 2070, blending of compressed biogas in CNG and PNG will be mandated in a phased manner. This is a very, very important line, and the companies that are in the business of commercially producing compressed biogas for the next 10 to 20 years likely to see very, very good future. And the reason I am saying that is, let me back it up with some data as well. Praj Industry estimates that the government plans to set up 5,000 biogas plants with an investment of around 2 lakh crores in the next 5 years. Now, this is not something that the government has announced, but this is something that Praj Industry, who is working in this particular area, is envisaging that it is going to be around 2 lakh crores of investment in the next 5 years. Now, the second massive tailwind I see for this particular company for the next 10 years is the environment sector, because what the government announced in the interim budget was that a new scheme will be launched to provide environment-friendly alternatives such as biodegradable polymers, bioplastics, and biopharmaceuticals. Now, we don't know the details of this scheme. Maybe that in the budget they will announce it. Maybe in the subsequent months they will announce and give us clarity about this particular scheme. But Praj Industry is already working into the bioplastic section. For example, they have got a new facility coming up in Mangalore, and also they have got a pilot plant for bioplastic. So they are not commercially already producing the bioplastic as of now, but they have got a pilot plant. This company, Praj Industry, if I were to sum it to you, it is a bioenergy company. But let me run you through few hypercritical points about Praj Industries. Point number one, in the last 1 month, the stock has given crazy 40% rally. Why the stock has given crazy rally in the last 1 month? Because sugar stocks are the talk of the town in the last 1 month. In fact, I created a detailed post on my YouTube member community explaining why the sugar stocks are in focus right now, and points such as Shivraj Singh Chauhan is taking the reins of agriculture minister, and also there is a push about government going and producing extra ethanol to blend in the petrol is another tailwind that we are already seeing in the last 1 month. And these timely updates can help you make good investing decisions. So please consider subscribing to the YouTube member community that I run on the YouTube. But coming back to Praj Industry, there are few things that you need to know. Point number one is that the company operates in 100 plus countries. Okay, 90 plus research scientists work in the company. They have a very big full-fledged R&D lab as well. Company holds around 400 plus patents, as you can see here. Almost 10% global ethanol production is what the company is doing right now. It's a net debt-free company, 3 years revenue CAGR is around 39%, very good. 3-year EBITDA CAGR 51%, 3-year PAT CAGR if you see 52%, and FY24 ROCE is also looking very good, 27%. And if I just break down where the company is earning the profits, bioenergy is contributing 74%, high purity is 8%. So the company produces high purity water that is used in pharmaceutical applications. Also the company has third segment, which is engineering, which is around 18% of contribution. Mainly they are helping many companies across the globe to set up ethanol plant, for example, or many other bioenergy related plants and equipments is what the company is providing. That's where the 18% revenues are coming from. Now if you see the financial trend of this company, up until FY23 the revenues were increasing at a very good rate. In FY24 the revenues have come down, and the key reason you see here in my notes is that in FY24 Indian government put restrictions on the use of sugar to produce ethanol, and therefore their order book was low, therefore their production was low, and that is why the revenues were down in FY 2024. So please take this as a red flag about this company, that this company is slightly cyclic from a sugar and ethanol perspective, and what you see on my screen is 4 to 5 big risks that you need to understand before you go into this company from a sugar and ethanol production perspective. Now talking about the future potential of this company and the order backlog, as of Q4 FY 2024 the company was sitting at 3,855 crores. This number is in millions, so I've converted that into crores, which is not very huge order book. It's not that we are able to see 4 to 5 years of visibility in terms of revenue. This is going to be sufficient for another year or so. Last point I want to cover from a valuation perspective, Praj Industries at the time of recording this video is trading at a PE of 49, while the industry PE is at 46, so not hugely overvalued right now. And from a PB perspective also 10.67 versus 5.58. So far in this video I have spoken about 3 stocks and I have covered a lot of details. I wanted to cover a lot more details, but the video has gone really long already. I want to create part 2 of this video. Let me know if you are interested in the comments. Should I create part 2 or not, and which budget stock should I cover in my part 2? Let me know in the comments, and if I get good response and if you like these videos, then I'll consider creating part 2 of this video so that you can get enlightened with lot of information, lot of data backed analysis, and can take some informed solid decisions when it comes to investing. Also don't forget to check out Odoo, a wonderful platform to create stunning website for free, and there is much more than just creating websites on Odoo. Please check out the link in the description or in the pinned comments. With that, I will see you in my next video. Until then, keep rocking.